It was last Wednesday around 6:45 p.m. when Jason finally collapsed onto his couch and found himself staring blankly at the ceiling tiles. Despite earning a respectable $92,000 a year as a senior project manager, his brain was completely fried from a day of back-to-back Zoom calls. In that moment of sheer exhaustion, the absolute last thing he wanted to do was stand in the kitchen to chop an onion or wait for water to boil. He pulled out his phone to open Uber Eats, not looking for a feast but just craving a simple double cheeseburger from the bistro only 4 blocks away. While the menu price at the restaurant was only $15, the app listed that same burger at $18, which was a markup he barely even noticed. He didn't register that 20% price hike because his blood sugar was crashing and his willpower was significantly lower than his bank account balance. When the app politely suggested a milkshake would pair well with his meal, he clicked Add without hesitation because he felt like he deserved a treat. Then came the checkout screen, that silent wealth killer stacking up a delivery fee, a service fee, and random taxes that turned a snack into a burden. Confronted with the tip prompt defaulting to 20%, he simply clicked Place Order without ever stopping to do the math on what just happened. If he had actually paused to look, he would have realized that his modest $15 burger had somehow transformed into a staggering $46.50 expense. He sat there waiting 45 minutes for lukewarm food to arrive, fully ignoring the fact that he could have walked there and back in less than 12 minutes. But here is the real kicker, because Jason isn't lazy. He runs marathons on weekends and manages complex million-dollar budgets at his job every day. He knows the value of $1, yet in that specific moment of fatigue, paying $46 didn't feel like highway robbery. It genuinely felt like relief. What Jason fails to realize is that this specific transaction wasn't just a one-time slip-up, but rather the foundation of his entire lifestyle. Whether he is ordering grocery delivery to avoid the chaos or buying pre-sliced fruit to save time, Jason is slowly bleeding money every single day. I have actually crunched the numbers, and this subtle habit called the convenience premium is effectively costing Jason over $12,500 every single year. That is hard-earned money vanishing into thin air, subsidizing his own exhaustion while making Silicon Valley investors significantly wealthier than they already are. If you have ever paid double for a meal just to avoid putting on shoes or clicked Buy Now to save 5 minutes, you need to watch this video. I am going to show you exactly how the modern economy is engineered to tax your tiredness and how much that tax costs you over a lifetime. I often refer to this financial drain as the laziness tax, but a far more accurate and insidious term is the convenience premium, a cost you are likely paying every single day without truly grasping the scale of the damage. You need to understand that this system is not an accident or just the free market at work, but rather a deliberately engineered trap designed to exploit a specific glitch in your psychology known as present bias. Behavioral economists have proven that your brain is hardwired to treat a minor inconvenience happening right now as infinitely more painful than a significant financial loss that happens abstractly at some point in the future. Think about Jason again. The mere idea of putting on shoes, walking 12 minutes and standing in line feels like a concrete physical weight, causing his tired brain to immediately scream no at the prospect of effort. But paying an extra $30 is just harmless pixels on a screen, a number buried in a credit card statement he won't see for weeks, making the financial pain theoretical while the physical effort feels visceral. When given the choice, your primate brain will almost always choose the path of least resistance to conserve energy, even when the underlying math of that decision is catastrophically bad for your bank account. The entire modern gig economy, from DoorDash and Instacart to Amazon same-day delivery, is essentially a trillion-dollar industry built entirely on the foundation of monetizing this specific cognitive bias in your brain. They are not actually in the business of selling you food or groceries. They are in the business of selling you the avoidance of mild discomfort at a 300% markup. They are betting their entire business model on the fact that you won't do the math, because doing the math is itself an inconvenience that your tired brain would rather avoid. The data proves they are winning, as a recent McKinsey report shows the average American household now spends over $5,000 annually on convenience services that barely even existed a decade ago. To put that rapid growth into perspective, that spending number has actually tripled since 2015, showing just how quickly we have normalized paying for things we used to do ourselves. We haven't biologically become lazier as a species in just 10 years. We have simply been handed more efficient and addictive tools designed specifically to monetize our exhaustion. Tech companies have removed all the friction of paying using Face ID and one-click ordering while highlighting the pain of doing things yourself, and we are taking that bait every single time. We often talk casually about convenience, but until you actually see the raw numbers on the screen, you cannot truly feel the crushing financial weight of exactly what you are losing. So let's take a moment to break down the specific, brutal math of this premium across the major spending categories where it hits your bank account the hardest. We have to start with the most obvious and aggressive offender in your daily life, which is the addiction to food delivery apps like DoorDash and Uber Eats. The average order on these platforms isn't just a few dollars more. The total cost is typically 40 to 60% higher than if you simply picked it up yourself. Most people fixate on the visible delivery fee, but that is just a magician's trick designed to distract you from where the real money is being stolen. The real cost is hidden in the menu markup, where restaurants inflate prices by up to 30% just to cover the commissions they are forced to pay the platform. So Jason's burger was already $3 more expensive before he even paid the service fee, the delivery fee, the small order fee, and the driver's tip. If Jason orders delivery just twice a week, which is a modest habit, he is paying a $13 premium each time, totaling $26 every single week. When you annualize that weekly cost, it comes out to $1,352 a year, vanishing completely from his net worth. Let that number sink in, because that isn't just loose change. That is essentially a month of car payments or a round-trip flight to Europe for a summer vacation. Every time that lukewarm pad thai arrives at his door, Jason isn't just eating dinner. He is literally eating a piece of his own retirement fund that he will never see again. But unfortunately, the math gets even worse when we shift our focus to the second major category, which is grocery delivery services like Instacart. Platforms like Instacart layer costs that are designed to be invisible, making you think you are winning with a free delivery promotion when you are actually losing. You are absolutely not winning because you are paying what experts call the shadow markup, a hidden tax that appears on almost every single item. Prices on these platforms are frequently 15% higher than the shelf price, and that is before you add the service fees and the driver's tip. A thorough Consumer Reports analysis found that the average grocery delivery order costs roughly 30% more than if you had just walked into the store. If your household spends $600 a month on delivered groceries, you are likely paying about $180 a month in pure convenience premium. That calculates out to over $2,100 a year paid solely for the privilege of not pushing a cart through a store. Combine just these two basic categories of food and groceries, and Jason has already vaporized nearly $3,500 of his hard-earned income. And the scariest part is that we haven't even touched on the sneaky microtransactions and subscriptions that fill up the entire rest of his financial life. The convenience premium isn't just restricted to the apps on your phone, it is actually hiding in plain sight right there inside your physical grocery cart. Take pre-cut produce, for example. A pound of pre-cubed watermelon costs about $6, while a whole watermelon yielding 3 times that amount costs only $5. You are essentially paying a staggering 400% markup just for the luxury of having someone else make 4 simple knife cuts for you. Or look at those little single-serving coffee pods, which cost about 75 cents a cup compared to just 15 cents if you brewed from a bag. That is effectively a 500% tax on your laziness just to avoid the 30-second inconvenience of scooping coffee grounds into a paper filter. If Jason drinks 2 cups a day, he is literally torching nearly $450 a year just to avoid that tiny bit of morning effort. Then there is the absolute masterclass in behavioral manipulation known as Amazon Prime, which Jason happily pays $139 a year for. He thinks he is saving on shipping, but he is actually paying for a subscription to frictionless spending that removes the psychological pause button from shopping. That free 2-day shipping eliminates the critical moment where you ask yourself, do I really need this? Or could I get this cheaper at Target? The data shows Prime members spend double what non-members spend, meaning you are paying a premium just for the privilege of spending your paycheck faster. Now I know exactly what you are thinking, and I can practically hear Jason's defensive internal monologue trying to justify this behavior right now. He argues that his time is valuable because he earns $45 an hour, so paying $20 to save an hour is just smart economic arbitrage. This is called the time-money fallacy, and it is the single biggest lie smart people tell themselves to justify burning cash on convenience. The first reason this logic fails is that you probably aren't working during the time you save. You aren't using those 45 minutes to bill a client. Jason uses that saved time to scroll Instagram or watch Netflix, meaning he hasn't converted time into money. He has simply traded money for leisure. The second reason is that the calculation is emotional, not logical. Nobody opens a spreadsheet at 7 p.m. to calculate utility rates before ordering a pizza. They order simply because they are tired, and the my time is money argument is just a rationalization invented after the fact to reduce guilt. The third reason is that for salaried employees like Jason, time is not liquid. You cannot magically summon an extra hour of paid work at 8 p.m. Your income is fixed whether you cook or watch TV, so the only difference is that one version of your evening saves money and the other burns it. So unless you are literally billing by the hour and actively working during that saved time, you aren't buying time, you are just buying a very expensive nap. Here is exactly where this story turns from being mildly annoying to genuinely tragic, because the convenience premium isn't just emptying your wallet today, it is actively sabotaging your financial future. It begins with a psychological phenomenon called hedonic adaptation, where the first time Jason ordered groceries it felt like a luxury, but by the 20th time, it just felt completely normal. His baseline expectation has shifted so drastically that the mere thought of pushing a cart through a grocery aisle now feels like an imposition, a struggle he shouldn't have to endure. And that is exactly what these companies are banking on. They don't want to be your backup plan, they want to be your default setting for every single meal. They are training you to be intolerant of any friction, because the less discomfort you can handle, the more you will pay to avoid it, creating a form of learned helplessness priced at $10 a month. Now let's look at the lifetime math of this habit, because this is the specific number that should genuinely keep you awake at night staring at your ceiling. If Jason continues spending a conservative average of $400 a month on convenience premiums across food, groceries, and rides, that totals $4,800 every single year. If he instead took that money and invested it in a boring S&P 500 index fund with an average 8% return over the next 35 years, that money wouldn't just be saved, it would compound. Do you know exactly what that $400 a month turns into over a lifetime? It grows into approximately $860,000. That is not a typo. Jason is sacrificing nearly $1 million of generational wealth for the privilege of not chopping onions and not walking 4 blocks to a restaurant. That sum of money represents a fully paid-off house, a funded college education for his children, and the freedom to retire 5 years early, all traded away for lukewarm burgers. So how do you actually escape this trap without living like a monk? You don't have to suffer, but you do need to wake up and take 3 specific actions. Step 1 is the audit, because you cannot fight an enemy you cannot see, so print out your last 3 months of bank statements and highlight every single delivery fee. Total up those highlighted numbers, because seeing that aggregate figure in black and white is usually enough to shock your nervous system back to financial reality. Step 2 is to reintroduce friction. The apps spent millions making spending easy, so you need to delete them and force yourself to use the slower desktop versions. Remove your saved credit card so you have to physically get up and find your wallet, giving your rational brain a fighting chance to intervene during that 30-second delay. Step 3 is to reframe the pain. When you walk to pick up your food, don't tell yourself you are wasting time. Tell yourself you are paying yourself $25 for a walk. When you cook a simple meal from scratch, realize that you are not doing chores. You are actively earning your freedom from a system designed to extract your wealth. Jason thinks he is treating himself when he orders out, but he is not. He is being harvested by an algorithm that celebrates a successful extraction of his capital. You can keep voting for that life where you own nothing but comfort, or you can start tolerating a little bit of inconvenience and reclaim the wealth that was yours all along. The choice is entirely yours, but please, do the math first before you click that order button again. My name is Wojak, and I spend way too much time thinking about money so you don't have to. If this video saved you a DoorDash order, hit that like button and subscribe.